Good morning and welcome to the Global Morning Call. Today is Monday, 7th of November 2016, and we start with an update from our Asia desk with Edmund, Leo, and
Thank you, Yasser. So in Asia, it was a broad-based risk on, with both the equity markets and the US dollar index sharply higher. This was after Clinton was cleared by the FBI over the handling of her emails. US S&P futures were up like 1.3%, suggesting a strong open on Wall Street later this afternoon, ending a 9-day decline. Dollar Mexican was actually lower in the Asian Open this morning, a reflection of Clinton actually regaining the lead in the polls. Dollar Mexican actually trades at 18.6 currently, which is trendline support from May 2016. So traders looking to play a Trump victory can consider a Dollar Mexican call option priced at approximately 3% of exposure at this moment. Friday's non-farm payroll data was obviously overshadowed by the US elections, where the headline NFP came in at 161,000 versus 175,000 expected. However, the market was more focused on Clinton's mini victory this early Asia morning, and we saw the DXY bounce off the 97 handle. Safe haven assets like gold, Swiss, and the yen tumbled with the equities risk on this morning. We will probably see a reversal of this move should we find ourselves with a Trump victory on Wednesday. A flight to safety is a real possibility in such a scenario, in particular for the gold and the yen, where we saw appreciation of between 6 to 10% post the Brexit on the 24th of June. And lastly, in China, we have a renminbi devaluation, or rather, sorry, a depreciation again after the PBOC set the fixing weaker at 677.25 versus 675 a day earlier. A Clinton win is associated with higher US interest rates, higher US Treasury yields, and possibly higher Chinese capital outflow, possibly exacerbating Chinese yuan weakness. And with that, let me hand it over to John Hardy. Thank you.
Thanks, Edmund. Good morning, everyone. So yeah, we have the three-ring circus known as the U.S. presidential election, providing surprises at every turn. And the latest was, of course, this FBI turnaround, as had been mentioned. And the market's very quick to jump to conclusion. The election is leaning Clinton in the polls, so even with Trump's regaining momentum, this is seen as perhaps providing the last gasp for a Clinton win. It's too early to know. I think this election is not a foregone conclusion, and basically this reaction has enhanced the potential reaction function if Trump does in fact pull out a surprise win. I won't distract too much with the calendar this week, as we all know it's all about those results rolling in, and I will have some rundown in tomorrow's morning meeting on the timing when the election starts to take shape, hour by hour, and how early we could actually see the market drawing even further conclusions in the night between Tuesday and Wednesday for us here in Europe, or not. If the election is close, then it's going to be a very long night indeed, and perhaps days to come. Because I think the risk is, of course, if it's exceptionally close, we could have Trump protesting that perhaps illegal immigrants voted, or at least unwilling to concede, being a risk and drawing out the uncertainty. This is the more Trump bullish estimates from 538.com, which is run by a noted statistician and famous caller of the 2012 election, giving him a slightly higher odds than a lot of the odds makers and other polling sites, just to see how the different races stand. And as we've noted before, it is about key states. The dark red and the dark blue are foregone conclusions. It's the real battleground is only in these so-called swing states, and ones where the margin of victory is very narrow because of the electoral system. So basically, Trump must win, for example, these four, and really the first three: Florida, Ohio, Carolina. If he clearly loses any of these three big ones, there's absolutely no path to a Trump victory. And in addition to those four, if he was to win those four, he's got to take 11 electoral votes from the following likely menu of options. Pennsylvania would be enough, or a couple of the smaller ones, etc. And again, the risk being that a close Clinton win sees Trump not willing to concede and draws out the uncertainty. Dollar yen is, to me, the major dollar pair most sensitive to election outcomes. That's been seen in how the market reacted to the first FBI reintroduction of uncertainty, and then the clearing up over the weekend. I think that's going to remain the case because the assumption is if Clinton wins, we get back down to business of looking at higher yields, the Fed rate hike, the yield differentials with the BOJ having fixed the curve, etc. And I think we can see dollar yen up to the top of the recent range very, very quickly. On the other hand, of course, drawn out uncertainty or a Trump win could mean we're testing the lower end of the range, but probably longer term, these are probably some pretty spectacular buying levels. But this is the pair, besides, of course, dollar MEX, which has moved around even more. But the major dollar pair, I think, is most sensitive to U.S. election outcomes. We'll get back with some more details on the hour-by-hour action Tuesday to Wednesday with tomorrow's morning meeting. I'll pass it along now, though. Thanks.
Thank you, John. Good review of what's going on with U.S. politics. It's getting closer, and we're definitely back onto to some risk-on sentiment after horrible last week. Obviously, it happens on the backdrop of the FBI statement on Clinton. You could see reaction in Asia, in Europe, and we have the DAX futures up 1.4% here in early trading. One of the themes also this week is obviously oil is going to still be weak. It looks very, very weak, and I think the most interesting from a stock perspective is actually that energy stocks have been lagging quite tremendously. The sell-off in oil, some of the service and drillers could be in for a rough week. Also, just finalizing what I just said on Clinton. If you look for potential upside gains here, then I think Mexico and the DAX offers the best opportunity. As you already know, we have a long position in the DAX index. Mexico, you will get a double gain both in the currency and a move in the stock market. Friday's job report added to a December hike. Probability is sort of unchanged at 76, but I think if you look at through all the various key points on wage growth and how the labor market is performing, it's definitely pointing up. The labor market continues to be to strengthen here. Earnings. The earnings season is really coming to an end. We have 90% of all the companies in the S&P 500 have reported. We have HSBC shares that jumped in Hong Kong on better expected Q3 earnings. We have Priceline reporting after the market. I think in general, when you look at the earnings season, I've showed this, and you can see this these two charts here in my earnings analysis piece on Trading Floor. I think it has been a disappointing earnings season. I had expected, and I know a lot of other analysts had expected a little bit more upbeat outlook, but also more growth in both the top line and the bottom line, given that the stronger dollar and the weak oil price base effects are sort of moving out. But there's still some lagging effects into the accounting numbers, but nevertheless, if you adjust from buybacks, you can see here that we are at very depressed levels on sales. We are back to levels seen around 2013, and we have a long way up to the previous highs on earnings per share. And as you can see here, these are the year-on-year movement in earnings per share adjusted for buybacks. We have had now 8 quarters with negative earnings growth, and that's the longest streak since the leading up till and after the financial crisis. So, but I've talked enough. I'll give the word to the next speaker. Thank you.
And that will be me. Just like everyone else, we are now in the final countdown to the election, but we continues to have a lot of shenanigans going on in the oil market. Friday was definitely one of them. First report from Reuters saying that Saudi Arabia had threatened an all-out price war if Iran didn't agree to freezing production. That was later denied by the Secretary General. So we had a lot of volatility on Friday. But what it resulted in was, if I can get the cursor to move, was basically. Okay, on the chart here you can see we managed to find some support here around the 200-day moving average, which is also the low from September. And since then we've seen a reasonably strong bounce. Also this morning, the Algiers energy minister has been out saying there's no going back on the agreement, and Russia is on board. He can't disclose in what sense, but that's just helping the market to calm down a bit this morning. But the question is obviously how much of a reaction we can have ahead of the election. Hedge funds, they did turn heavy sellers, and unsurprisingly last week they at the beginning of October they had the biggest 2-week surge in terms of buying on record, and a lot of those longs are now being given back. The long is still quite a bit above the lows we saw before the Algiers rally kicked off back in late September. So, but the date was of last Tuesday, so obviously we would have seen quite a lot of more long liquidation as we move towards the weekend. The market, the physical market remains oversupplied. Keep an eye on Brent prompt spread, last at $1. So basically, it's the roll spread between January and February is $1, and that's the highest we've seen in a year, similar to what happened when December and rolled into January. So as long as we see this quite high spreads, that does indicate that the Brent crude is oversupplied, and that will remove the chance of a strong recovery. But just price-wise, key is obviously now the 45 area, and if we start to see a bounce, we could actually go as high as 48.38 without having seen any major change in the overall direction of the market. So expect plenty of volatility over the coming week. Volatility is going to happen in gold and silver as well. We have retraced this morning following the FBI news, which has also led to a stronger dollar. The outcome of the election is very binary for gold. It's either or. If you look at the expectations, a Trump win is generally believed to favor the upside, while a Clinton win could attract some selling of hedges been put on over the past week. Hence the popularity of options when the outcome is so difficult. But there was quite a bit of buying last week, second week of buying following the sell-off during the early parts of October. So the market is just in the short term exposed to some weakness if we should see a Clinton win, but then the market may start to revert, focusing in on the rising inflation outlook that we've seen pop up over the past months here. Finally, just on copper, will this be a fifth time lucky for copper bulls? 5 times this year we tried to. We've seen a rapid build in longs, only to be struck down when the market remains range bound. But we did see a breakout last week, and that seems to be that is rewarding those who bought a record amount of copper last week in the week up to November 1st. So the rally has continued this morning up by more than 1%, despite the dollar strength. So we have an underlying bit coming back into copper. And just finally, just on the COT report, just to want to highlight a couple of the pickup in gold longs and the continued reduction in oil longs. I'll send out the report within the hour. So that's it for me. I'll pass on to Michael.
Thank you, Ole. In the fixed income markets, all about the US election. Also, we have bunds dropping here right on the opening, like half a point here to 162 after the Clinton headlines. This takes the 10-year yield back up to 17 basis points, which is just 4 basis points shy of the recent high we had there at 21 basis points. We see credit indicated 10 basis points tighter as well. So, but the near term is going to be all about the outcome. If Clinton wins, we could easily see a break of the 21 basis point mark. So that is bunds to drop further. If Trump wins, of course, we expect to see a safe haven bit in the opposite direction with the risk off. Although we probably would expect a Trump administration to be less accommodative policy-wise, so that would mean, or likely mean, higher yields on the longer term. And this could even dampen the rally and the yield drop in the short term, should he pull out a surprise win. The NFP on non-farm payrolls on Friday didn't do much to tilt the hike chances. It's still priced at 76% for a December hike. The 10-year U.S. Treasury dropped just a few basis points to 1.78%. Another story that we're still looking at and could be the next big thing, especially for European markets, is the Italian constitution referendum in early December. The BTP Bund spread, and that is the difference between the German and Italian 10-year yields, as it's shown here on the right-hand chart. It has widened to the highest level since 2014 at 160 basis points after the latest polls indicate a lead for the rejection campaign there. So that's something to look out for, definitely, but probably not until after this week's election in the US, Tuesday and Wednesday. That's everything from us today. Thanks for tuning into the morning call this morning, and have a safe day ahead.